All right, let's talk about something that's probably in your wallet right now, the credit card. It seems simple, but there's a whole world behind that little piece of plastic. Today, we're going to break it all down, what they are, how they really work, and help you figure out if using one is the right move for you. Let's dive in.
So picture this. You're a student. Your classes are all online, and just your luck, your smartphone dies. You absolutely have to get a new one, and your first class is literally tomorrow.
You've already called your parents, they're on it, but you know how bank transfers are. The money isn't going to land in your account for another 3 days, but you need that phone today.
So what's the play here? You've got a genuine, urgent need, but the cash just isn't there yet. This kind of tight spot is exactly why credit cards exist in the first place. And that scenario is the perfect setup for our first section, where we look at the credit card as basically a loan you can hold in your hand.
So what is it really? Well, simply put, a credit card lets you buy what you need right now and worry about paying for it later. It creates a gap between when you get something and when the money actually leaves your pocket.
Now, this is the most important distinction to understand. When you use your debit card, that's your money. It comes straight out of their bank account, instantly, gone. But with a credit card, you're using the bank's money. It's their cash on the line, and you just promise to pay them back.
Yeah, that's exactly the way to think about it. Every single time you swipe that card, you're taking out a tiny little short-term loan from the bank, just for that one purchase. Okay, so if you're constantly taking out these mini loans, how does the bank decide if you're trustworthy? Well, that's where your credit score comes in. It's basically your financial report card, a grade from 300 to 900 that tells them how much of a risk you are.
And if your score is up in that top range, say 750 to 900, you're an A-plus student in their eyes. They see you as super reliable, and that trust means they're willing to lend you more money, which translates to a higher credit limit on your card.
So, if it's all just borrowing money, why would you even want one? Well, that brings us to the good stuff, the perks of plastic. If you use it right, there are some pretty awesome advantages.
For starters, just like with our smartphone situation, it lets you cover urgent expenses when you're in a pinch. Plus, and this is a big one, you get way better fraud protection. Think about it. If a scammer gets your card details, they're stealing the bank's money, not yours. In a country like India, if you report it in 3 days, you're not liable for a single rupee. And then, of course, there are the rewards. We're talking cashback, flight miles, discounts, insurance, you name it.
But, and this is a really big but, it is not all sunshine and reward points. Playing with the bank's money comes with some very, very real dangers if you're not disciplined.
This right here is the biggest risk of all, the debt spiral. It all starts so simply. You just miss one payment. Then the bank slaps a high interest charge on your balance. Suddenly, the amount you owe is bigger. That makes the next payment even harder to make. And before you know it, you're trapped in a cycle that's incredibly hard to break.
And the interest we're talking about is no joke. It can be as high as 30% a year. That is massively higher than almost any other kind of loan. It's how a small, manageable purchase can explode into a giant, crushing debt.
And on top of that killer interest, you have to watch out for all the other fees. There are annual fees just for having the card. Miss your payment deadline, boom, late fee. And whatever you do, try to avoid taking cash out with a credit card because they'll hit you with a withdrawal fee of 2 to 5% right away.
All these fees and interest charges start to paint a pretty clear picture, don't they? This is a business, so let's pull back the curtain and see how the house always seems to win. This chart says it all. Banks make money from annual fees, late fees, you name it. But look at that giant slice of the pie. Their biggest moneymaker, by far, is the interest they charge when people can't pay their bill in full. A huge part of their business model literally depends on you messing up. Now, you've probably noticed names like Visa or MasterCard on cards. They aren't the banks themselves, they're the payment networks. Think of them like the global highways that let all these transactions happen. The banks, like Kotak or RBL, then build their credit cards on top of these networks. Okay, we've seen the good, the bad, and the really ugly. Which brings us back to the most important question of all. When it comes down to it, is a credit card actually a good idea for you? And honestly, the answer boils down to one simple word: discipline. A credit card can be an incredible financial tool if you have the discipline to pay your bill in full, on time, every single month. No exceptions. But it's a dangerous trap if you tend to buy things you can't really afford with that little voice in your head saying, "Yeah, I'll figure out the money later."
And at the end of the day, that's the question you have to answer for yourself. This little piece of plastic can be a powerful tool that offers convenience, security, and rewards. Or it can be a trap that preys on a lack of discipline. Which one will it be for you? The choice is entirely yours.